So I love these situations and it has set up perfectly. We're going to look at MOS again. This is on the 1 hour chart, so this goes back a few weeks. It has been oscillating between 34.50 and 36.50. So there's a $2 range that it's been in for the last few weeks. It took this nosedive here. So this is what I did. If you remember my previous MOS videos, let's look at MOS. Where's it at? If you look at previous MOS videos right here, I got 100 shares at 35.50. Okay. It's currently trading just below that, so 35. Okay. This position is negative 38, but look at this call I sold out there. When the market crashed, when Mosaic crashed all the way down to 31, I sold a 37.50 call all the way out to July, so a month away. Okay, and I sold it for a decent amount here, but it's getting closer here, so it's actually overvalued a little bit. But Mosaic is coming back into this 35 level, so it's below my current cost basis. So this is a perfect setup. What you do is you buy another 100 shares at $35, okay, because it's under my current cost basis. Then you sell a call at $35, so at the money. And then what you do is you exchange this 35.50 shares for the 35 shares to cover this covered call. Okay, so all I'm doing is I got 200 shares and 2 covered calls, but then when my shares get called away, I do the higher price shares, which are closer to the money, and then keep my lower shares for this big spread because it's less of a chance that this will trigger. So let's do that right now. Let's go ahead. Well, I like to go to the 1 minute. Let's go to the 1 minute. It's kind of uptrending here a little bit, so I want to buy it outright because the market is actually uptrending. Let's buy 100 shares at the 35.15. Let's hit that. And then my previous cost basis was 35.50. So let's go out to trade to 35.50 here. And even though it's a little premium, that doesn't factor in. As long as I get any premium, the strategy will work because I'm going to collect $20 on this. It expires tomorrow, and then I'll get rid of those 35.50 shares, keep my 35 shares, and then those will be there for my covered call in next month. So that spread will be wider, and there's a better chance I keep those shares. So that is kind of a complex strategy, but it goes to show you that the 1% works. Don't get greedy. Just try and get your 1%. If I would got greedy and sold it at the money call at 35.50, that may trigger here, and I won't have the opportunity to lower my cost basis. So don't get greedy. Get your 1% and hope for a nice setup like this where you can lower your cost basis, collect premium, and possibly not get called away.